Jakarta, Indonesian authorities postponed a meeting with coal mining companies on Wednesday, as scores of ships moored off the coast remained in limbo as they waited to see whether the government would lift a ban on coal exports. The government has said it would review the ban on Wednesday and was due to meet mining companies in the morning ahead of a decision, which is keenly awaited by top economies in the region that rely on Indonesian supplies. However, officials at the Indonesian Coal Miners Association said a planned meeting with Trade Minister Muhammad Lutfi had not taken place. They did not say why the meeting was postponed and added no new time had been agreed. Ministry officials declined to comment. Indonesia, the world's top exporter of thermal coal and China's largest overseas supplier, announced on Saturday a ban on coal exports in January to avoid outages at its own generators, sending coal prices in the region surging. Amid high demand for electricity in winter, Japan's embassy in Jakarta on Wednesday urged the Energy Ministry to lift the export ban for high-caloric coal, which is not used by local generators. The sudden export ban has a serious impact on Japan's economic activities as well as people's daily life, the embassy said in a letter, adding at least 5 vessels already loaded should be given immediate departure permits. Japan imports approximately 2 million tons of coal per month from Indonesia, the embassy added. Asia's economic powerhouses China, India, Japan, and South Korea together received 73% of Indonesian coal exports in 2021, ship tracking data from Kpler showed. China's benchmark thermal coal futures rose as much as 7.8% on Tuesday in the first day of trading since the ban was announced, before paring gains on Wednesday. The futures were last traded at 702 yuan a ton, down 1.3%. ICE Newcastle monthly coal futures also jumped sharply when trading resumed on January 4, registering their largest one-day gain since November 3 and topping $174 a ton for the first time since October. Separately, state-owned enterprise minister Erick Thohir said late Tuesday his ministry, along with the Energy Ministry, planned to hold talks with state power company Perusahaan Listrik Negara to review their coal supplies. We will clearly map out the condition in each coal power plant, so later on we won't find any more problems, Erick said. The meeting with PLN might take place on Wednesday evening, followed by talks between the Energy Ministry and miners, an official at the Energy and Mineral Resources Ministry said. The utility said as of Wednesday it has secured contracts for 13.9 million tons coal, but needed more to reach safe stock levels. During the impasse over exports, around 100 vessels either loading or waiting to load a total of around 5.9 million tons of coal have amassed near Indonesia's main coal ports off Kalimantan, Refinitiv data shows. This includes around 25 vessels waiting off the port of Samarinda and 27 off to Borneo. We have not seen any shipments loaded after December 31, said a trader in India's western Gujarat state. Meanwhile, Indonesia's Tangguh and Bontang gas plants are committed to selling 58 cargoes of liquefied natural gas to PLN in 2022, regulator SKK Migas said on Wednesday. Indonesian President Joko Widodo this week called on LNG producers and coal miners to prioritize domestic needs. State coal miner PT Bukit Asam said on Wednesday ICMA and the Trade Ministry had submitted to the Energy Ministry names of companies that had fulfilled their domestic market obligations, in which it is proposed to lift the export ban for such companies. Those obligations require miners to sell 25% of their output to local power plants at a maximum price of $70 per ton. Abuja, shares of Airtel Africa hit an all-time high on Wednesday, lifting Nigeria's main stock index, after the mobile phone company said it will use proceeds of a tower sale to reduce debt. Airtel, the third biggest listed firm in Nigeria, with a dual listing in London, gained the maximum 10% allowed to 1,050.50 naira. The main index was up 1.05% at a 7-week high. Airtel Africa, with a presence in 14 African countries, announced the first closing of the transaction to sell its tower assets in Tanzania to a joint venture company for $176.1 million. Around $60 million from the proceeds will be used to invest in network and sales infrastructure in Tanzania, with the balance used to reduce debt at group level. New Delhi, A Delhi court has halted arbitration proceedings between Indian conglomerate Future Group and its estranged U.S. partner Amazon.com in light of the National Antitrust Agency's suspension of a 2019 deal between the two sides. The decision on Wednesday is a setback for U.S. e-commerce giant Amazon, which had successfully used the terms of its 2019 investment in a future unit to block the Indian company's attempt to sell retail assets to a rival. But after the Competition Commission of India suspended the 2019 deal last month, citing suppression of information by Amazon while seeking clearances, Future argued there was no legal basis for the arbitration between the two sides to continue in Singapore. A two-judge bench led by Chief Justice D.N. Patel of the Delhi High Court agreed with Future's arguments, putting the arbitration proceedings on hold. If the proceedings are not halted, Justice Patel said this would cause an irreparable loss to Future. We hereby stay further proceedings of arbitral tribunal till next date of hearing, said Patel, adding the court will reconvene on February 1 to hear the case again. Future and Amazon did not respond to requests for comment. A source familiar with the case said that Amazon was likely to legally challenge the Delhi High Court's decision. The long-running dispute is being heard by a Singapore arbitration panel, but the so-called seat of the arbitration is New Delhi, meaning proceedings are governed by Indian law. Amazon has long argued that Future violated the terms of its 2019 deal in deciding to sell retail assets to market leader Reliance Industries, and the U.S. company's position had so far been backed by the Singapore arbitrator and Indian courts. Future denies any wrongdoing. The dispute over Future Retail, which has more than 1,500 supermarket and other outlets, is a flashpoint between Jeff Bezos' Amazon and Reliance, run by tycoon Mukesh Ambani, as they try to gain the upper hand in Indian retail. Future had approached the Delhi High Court after the Singapore arbitration panel did not agree to its immediate demands to terminate the proceedings after antitrust suspension of the 2019 deal. Amazon has said it will legally challenge the CCI's suspension of the 2019 deal. Future has said it is staring at liquidation if the Reliance asset sale deal fails after its retail businesses were hit hard during the COVID-19 pandemic. Seoul, private equity giant Carlyle Group bought a 10% stake in logistics company Hyundai Glovis Co. Ltd. worth about 611 billion won, Hyundai Motor Group said on Wednesday. The shares in the Hyundai Motor affiliate were sold by Hyundai Motor Group chairman Yuezhan Chung and honorary chairman Mongku Chung, Hyundai Glovis said in a regulatory filing. Mongku Chung and Yuezhan Chung are father and son. Carlyle's deep sector expertise and strong operational value creation capabilities will benefit the corporate value and the shareholder value of Hyundai Glovis going forward, the group said in a statement. Carlyle did not immediately respond to a request for comment. South Korea recently strengthened its antitrust regulations against listed companies with more than 20% held by owner families, down from a 30% stake. Colombo, Sri Lanka has allocated $500 million to repay an international sovereign bond maturing on January 18, Central Bank Governor Ajit Nivard Cabral said in a tweet on Wednesday in an attempt to shore up investor confidence. CBSL has allocated the required #Forex for the $500 million #SB that is maturing on January 18, 22. It's a shame that some investors lost out because of organized and negative stories spread by certain vested interests, the governor tweeted. Sri Lanka has to repay about $4.5 billion in 2022 starting with the $500 million in January. The country's reserves had dropped to $1.6 billion at the end of November, forcing the central bank to draw on a $1.5 billion yuan swap from China, to lift reserves to $3.1 billion at the end of December. Fitch Ratings on December 18 downgraded Sri Lanka's sovereign rating to CC from CCC, citing a growing risk of debt default in 2022, despite central bank assurances that steps would be taken to meet all repayments. Beijing, Walmart Inc. armed Sam's Club, responding to the furor in China over what local media said was its deliberate removal of Xinjiang-sourced products from its app, denied the move in a call with analysts and termed it a misunderstanding. Chinese social media users and local news outlets criticized Sam's Club, a members-only warehouse club that offers products and services, last week for the removal of the products from its domestic online stores. China's anti-graft agency accused the U.S. retailer and Sam's Club of stupidity and short-sightedness over the matter. A Sam's Club representative told local analysts in a call organized by a domestic securities firm last week that Chinese consumers failed to find products from Xinjiang because the app does not support searches for products based on names of places. The call, a full recording of which was shared with Reuters by a participant, introduced the representative as Sam's Club regional e-commerce leader surnamed Zhang. "This matter is a misunderstanding," Zhang said on the call. "We didn't defend ourselves, because there is no reason to be afraid of things we haven't done," Zhang added. A second participant corroborated Zhang's comments made on the call, which also talked about Sam's Club's plans in China. Walmart did not respond to a request for comment. Neither Walmart nor Sam's Club has commented publicly so far on the backlash against them in China, and Zhang did not comment on the situation at Walmart, which was also accused of removing products from the far western Chinese region, from both its offline stores now. The controversy, which prompted a wave of Sam's Club shoppers in China to cancel their memberships, underscores the tightrope foreign companies walk in China as they balance geopolitical tensions between China and the West with China's importance as a market and supply base. Xinjiang has become a growing point of conflict between Western governments and China, as UN experts and rights groups estimate more than 1 million people, mainly Uyghurs and members of other Muslim minorities, have been detained in camps there. China has rejected accusations of forced labor or any other abuses in Xinjiang, describing the camps as vocational centers designed to combat extremism, and in late 2019 said all people in the camps had graduated. Memberships cancelled. Besides Walmart, Swedish fashion retailer H&M and US chipmaker Intel have come under fire in China in recent months for making adjustments to their businesses over Xinjiang. In contrast, Tesla was criticized by US rights groups for opening a showroom in Xinjiang on December 31. Chinese social media users turned against Sam's Club shortly after US President Joe Biden signed legislation on December 23 banning imports from Xinjiang over concerns about forced labor. Zhang said that Sam's Club, which has 4.4 million members in China, saw around 500 shoppers cancel their membership cards in its central region. He did not give a nationwide number. "It has negative impact on our membership base, but time will prove everything in the future," he said. "We think the potential in China is very big." China is a huge market for Walmart, generating revenue of $11.43 billion during the company's fiscal year that ended January 31. Of 423 retail units Walmart operates in China, 36 are Sam's Club stores, according to its website. Chicago, Walmart Inc. said on Tuesday it plans to hire more than 3,000 U.S. delivery drivers and build out a fleet of all-electric delivery vans to support its in-home grocery delivery service, its latest investment in its last-mile fulfillment network. The retailer, which said it has about 100 drivers at present, expects to be able to reach 30 million homes by the end of the year. It now services 6 million homes. Bentonville, Arkansas-based Walmart in 2019 launched its in-home delivery service, through which workers deliver groceries directly into shoppers' homes, sometimes placing items straight into kitchens or garage refrigerators when people are not in the house. The driver uses a one-time access code to unlock the customer's doors or garages through an app that pairs with a smart entry lock. Fearing COVID-19, many shoppers have turned to online grocery delivery since the start of the pandemic, sparking aggressive competition in the industry from the likes of Amazon.com Inc.'s Whole Foods, Instacart and Uber Technologies Inc. Walmart has experimented for years with last-mile delivery options. In 2017, for instance, Walmart established a program through which its own store employees would bring online orders directly to shoppers' homes after completing their usual shifts on sales floors. In August, ahead of the U.S. holiday shopping season, Walmart launched a last-mile delivery service for other merchants. Last year, it also tested company-branded, last-mile, delivery vans, taking a page from Amazon's playbook as online demand pressures United Parcel Service, FedEx Corp. And the U.S. Postal Service. Tokyo, Japan's consumer confidence fell slightly in December, the government said on Wednesday, as domestic COVID-19 cases started rising towards the end of the month. A Cabinet Office survey showed the sentiment index for general households, which includes views on incomes and jobs, was at 39.1 in December, compared with 39.2 in November. That marked the index's first fall in 4 months. The government kept its assessment of the sentiment index unchanged, saying there were continued signs of improvement. Singapore, Chinese gaming and social media company Tencent Holdings has sold 14.5 million shares in Singapore-based gaming and e-commerce firm Sea at $208 each to raise $3 billion, according to a term sheet seen by Reuters on Wednesday. Tencent sold the stock at the lower end of the $208 to $212 per share range when the transaction was launched on Tuesday. Tencent and Sea declined to comment on the share sale. The price set was a 6.8% discount to Sea's last closing price on Monday of $223.31 per share. Sea shares dropped 11.4% on Tuesday in New York to $197.84 on the back of the divestment news. The sale of 14.5 million shares reduces Tencent's stake in Sea to 18.7% from 21.3%. The company said it intends to retain the substantial majority of its stake in Sea for the long term. The share sale unlocks a portion of the value of Tencent's investment in Sea, which has seen significant growth and expansion in its global business operations. The divestment provides Tencent with resources to fund other investments and social initiatives, the company said in a statement. Tencent will be subject to a lock-up period that restricts further sale of Sea shares by Tencent during the next 6 months. Sea's U.S.-listed shares slumped about 8% to $205.50 in early trading, and Tencent's shares closed 0.8% lower at $450. Tencent's move comes just days after the company said it would divest $16.4 billion of its stake in JD.com, weakening its ties to the e-commerce firm, amid pressure from Beijing's broad regulatory crackdown on technology firms. Sea said Tencent and its affiliates had given an irrevocable notice to convert all their Class B ordinary shares. Upon conversion, all outstanding Class B shares of Sea will be beneficially owned by Forrest Li, the founder, chairman and CEO of Sea, whose market value of $124 billion makes it Southeast Asia's most valued company. Tencent has also agreed to terminate its proxy to Li after the conversion. Sea is proposing to increase the voting power of each Class B ordinary share to 15 votes from 3. The board believes that, as Sea has scaled significantly to become a leading global consumer internet company, it is in the best interests of the company in pursuing its long-term growth strategies to further clarify its capital structure through the contemplated changes, it said. Sea said the changes are subject to approval by its shareholders at its annual general meeting set for February 14. It said that once the changes are made, the outstanding Class B ordinary shares beneficially owned by Li are expected to represent about 57% of the voting power, up from about 52%. Separately, Li holds about 54% of the total voting power related to the size and composition of Sea's board of directors. Jakarta, Indonesian coal miners are due to hold talks with government officials on Wednesday on a ban on the country's coal exports that has unnerved global markets for the fuel and triggered energy security concerns in some major economies. Indonesia, the world's top exporter of thermal coal and China's largest overseas supplier, on Saturday announced a ban on exports in January to avoid outages at domestic generators. Miners were scheduled to meet Indonesian Trade Minister Muhammad Lutfi starting from 0900 am. An official at an Indonesian Coal Miners Association said. Separately, state-owned enterprise minister Erick Thohir said his ministry, along with the Energy Ministry, will hold talks with state power company Perusahaan Listrik Negara to review their coal supply. We will clearly map out the condition in each coal power plant, so later on we won't find any more problems, as has been directed by the president, Erick said in a statement late on Tuesday. It was unclear if coal miners would also attend the meeting with PLN. PLN on Tuesday said it had secured an extra 7.5 million tons of coal, but aimed to continue increasing stockpiles so it had at least enough supplies to last 20 days. The state power company had previously said it needed 5.1 million tons of additional supply for January to avoid widespread outages.